CoinBase figures have come in worse than expected, and it shows a company in trouble. The profits for the last quarter, or the loss for the last quarter, was 1.1 billion. If you compare that to its peak, CoinBase made 1.6 billion in a quarter in its peak. What's happened? Well, the public are using Coinbase much less than they were, of course, at the peak. The cryptocurrency prices were higher, so therefore they were able to make a larger margin. Not only the public using it less, but also institutions have de-risked. Of course, if we look at the stock market, you'll see that institutions have de-risked in the tech sector in particular, but they've de-risked in the stock market as well. Of course, Coinbase, however, has got costs, but worryingly, its costs have gone up. Normally, when you've got a company, if it's doing less business, it's able to reduce its costs. In fact, you had the opposite with Coinbase, and that's what's concerning. Its operational costs nearly doubled. It's invested more money in tech. So it's tech, it's looking to improve it, which of course, many would say that's a good thing to be able to do. But if they improve the tech and they don't get custom, of course, that's a business that's got problems. We also look at the regulation, and the SEC are indeed investigating Coinbase. So again, that's a distraction. It reduces morale. And of course, when we're looking at a company, it needs strong leadership. Armstrong needs to come out if we're looking for a stock to recover, and it's down, as I said, 64% this year, Coinbase. If we're looking for it to recover, it needs strong leadership with optimism, talking about how he's going to change things and get recovery. Already they've laid off 18% of staff. It's costing them, however, more money, and that's in the price as well, for share options. So they promised many of their staff share options. The share price has gone down. They're having to give more options or more shares to their people, their employees. And again, it's another cost to the company. The cost of sales, or the cost, the amount of money they're spending on advertising, has reduced. So they're spending their money on increasing operational costs, operating costs within the tech part of the company as well. So operating costs, spending on tech, okay, is increasing, advertising is decreasing. Okay, how can they turn it around? Well, they've got 6 billion in reserves. So we say 1.1 billion as a loss. They've got 6 quarters in effect, as long as the loss rate doesn't increase, to turn it around. How do they turn it around? Well, first of all, they need to change their image. They need to be giving better customer services, in my personal opinion. They need to be making sure that the SEC is dealt with in a professional manner. Criticizing the SEC doesn't do them any favors. So they need that investigation to be settled in an amicable manner. And don't forget, that could cost a lot of money. Settling with the SEC may even cost them $1 billion potentially. So again, you see, wow, that again could be a massive, massive cost. They've got to attract customers back in. If crypto goes back up in price, then of course, that is likely to have more people wanting to invest in crypto. Good news is that we've seen crypto stabilize, and indeed we're seeing in the last few weeks Bitcoin and Ethereum in particular increasing in price, and again potentially a run to the end of the year. They've got to deal with BlackRock. Is that a good thing or a bad thing? Well, it seems to be a good thing, because BlackRock, after all, is the biggest investment manager in the world, 10 trillion. So actually having access to that would seem a good thing. Okay, but don't forget, you've got the original crypto investors. What are they like? Original crypto investors are the people that say, we hate the banks. Okay, we want to make sure that we've got a system that's decentralized. We want to not have to pay bank charges. We don't want to be in an economy where the government can just print more money. Okay, so original people in crypto, the strong crypto people, are anti-establishment to some extent. Joining up with BlackRock, well, obviously it seems to be a good thing. But if you're one of the people that anti-establishment, as the original and the main crypto core people are, then BlackRock is probably the worst thing that you can actually do. Does it give potential? Yes, it gives potential for institutional sales, but don't forget institutional sales, tiny margin, it's not going to turn this company around. Okay, so what are we saying? We need saying Armstrong needs to stand up, he needs to get a strong image out there. It's probably the most important thing that needs to happen. Crypto prices need to increase. If you can get that right and actually get across strong leadership, and at the same time you get crypto prices increase and Coinbase become, I'll call it fashionable again, something that people want to use, okay, then you'll see a company that could potentially its share price rocket because it's down a lot. They can return to profit, that stock price can go up enormously. Right now, I think the stock price is going to go down over the next few days. We'll see what happens. No one's got a crystal ball. There may be buying opportunities, but it's definitely a company in trouble. There's your update, short and concise. Hopefully that gives you the information you need. Please like the video if you've gained something from it. I try and get out a video every day. It helps me if you like it because it helps with the algorithm. Please subscribe. I'll put out information each day on what's happening in the investor market, what it takes to be successful in life. Short, sharp, concise, give you the facts. Please hit subscribe, please like, and please share the video.